Folks, I represent you. I'm a normal, well, Paul, it's funny. People laugh that I've moved out of normal position, but I always consider myself a normal guy, somewhat lost in the investing realm of what do I do. I used to buy stocks, and I hope they go up. My positions on what I was saving. Actually, the idea of saving for retirement, Mo, was a burden on my back. My wife and I thought about it many times.
Did you really?
Yeah. Well, are we saving enough? It even got to the point where, like, sometimes, well, I've been married almost 18 years now. So it's like, hey, you bought that, but we should be saving more. And it's this thing. So until you get a grasp on your savings and your retirement, it's tough out there. We know. And if you're not saving at all, welcome. But it's a scary world out there, Paul. The social media apps, if you're on the non-fluffy ones, like, Pinterest is just sharing beautiful photos of rainbows and vacation spots. But Facebook, we've learned from the whistleblower that if you watch a video about a stock market crash, they're instantly, as soon as you scroll down, going to send you more scary stuff about the world. And so, Paul, we're here to have you fondle my heart when it comes to why, obviously, maybe not so obviously, a stock market correction has been long overdue.
Or crash, whatever it is. I do think it'll be a crash, by the way. Every day, there are 7.5 billion people in this world. There are how many countries? Hundreds of countries. Every day there is bad news. And bad news tends to make the news. And I'm not saying that's good or bad. It just is. What you have to decide is how you're going to react to that. E plus R equals O.
Oh, yes.
Right? Explain that, Seth.
This is a company I work for. They're based out of Columbus. Great company. They inspire businesses to be better. And it really comes down to numbers, Paul. But E plus R equals O is event plus response equals outcome. A very eye-opening formula that I learned a very few years ago. And it's been implementing in major businesses, football teams. This formula is really can be a second by second formula you can implement in your life to stay calm, to move forward in a timely and well thought out manner. Paul, I'm glad you brought that up. But this is the mindset we might need to have with a correction. What do we do?
Or a crash. So guys, this is why we preach diversification and dollar cost averaging. If you're saving for the long run, 20, 30, 40 years, which most of our viewers are, our average viewer is in their 30s. So if you're going to save for 30 plus years, there are going to be so many things that happen in the next 30 years, you have no idea how bad it's going to be. But guess what? The good's going to outweigh the bad. Let me pull up this chart, this graph. This is the S&P 500 equivalent going back to 1871. Seth, 4.44 was the S&P 500 equivalent. Because the S&P 500 didn't start until 1958, but this is data. And you just start scrolling up. And it goes, and it goes up, and it goes up, and it goes up, and it goes up, and it goes up. And now we're in 2021, and it's 1,100 times higher. In that time period, how many bad things have occurred? We've had assassinations of presidents. We've had 2 world wars. We've had a Korean War. We've had a Vietnam War. We've had civil unrest. We've had, race. We've had everything possibly bad that could imagine has happened in the last 150 years. And guess what? The stock market is still 1,100 times higher than it was in 1871. Why? Because there's still far more good out there. And your job is to not react to the individual things that happen. When there is a stock market crash, because there will be several stock market crashes in your life. In the last 20 years, there have been three notable ones. Yep, the dot-com crash, the financial crash, and the COVID crash. 3. Where stocks fell by 50%, 60%,
and 40%.
And 40%. And the 40% was within 1 month.
Yep.
Guys, these things happen, and they're going to happen. What you need to be able to do is take yourself out of it and say, my outlook is 30 years from now. Do I think the US will be bigger and better, and the world will be bigger and better in 30 years? If the answer is yes, that's why you keep investing month to month. If the answer is no, you need to go talk to somebody. And I'm not kidding about this one. You need to have a decision. You need to have a conversation with a therapist about your outlook on life. Your outlook on life is everything. If you have a positive... Now, there's something great about optimism. I think I read this in Psychology of Money. Optimism isn't saying everything will be great, rah, rah, rah. Optimism is saying, in the long run, everything will be good. Along the way, I will handle all the bad that happens. There will be hurdles. There will be obstacles. In the next 30 and 40 years, we can't even imagine the bad things that are going to happen in this country. We can't even imagine the bad things that are going to happen to a lot of companies. But at the end of the day, what matters is, am I going to sit there and let that affect my day-to-day decisions, or am I going to keep my eye on the prize? That's all it is. Easier said than done. That's why investing isn't about knowledge of numbers. It's about emotion. That's all investing is about. If you can control your emotions in investing, you will do very, very well.
The argument would be that I think normal people do look, and they look every day.
Well, stop. Just like you guys, if you own a house, is there a sign above your house every single day telling you how much that house is worth? Thank God it's not, because if it was, you'd probably be selling every time you see it going down.
We would just see everybody standing outside their house like this all day.
Yeah. For those of you who own a business or work for somebody who owns a business, do they know what their business is working on a day-to-day basis?
Absolutely
No.
not. You're right.
They just sit there and say, well, if 10 years from now my profit's higher and my business is valued X today at a reasonable level, it'll probably be higher in the future. We had an issue happen with one of our businesses, Seth, and you called me and said, Paul, are you worried? I said, no. Why? Because I said to you, Seth, in 3 years, I think the revenue and profit will be higher in that business. So you said, it'll be a lot higher. I said, then I'm not worried.
You're
right. Like, wow, you're right.
Yes.
And it was something completely, I have 8 or 9 businesses upstairs, and all I care about is, what's my revenue and profit on a month basis? Is it growing? Are we becoming a better company? Because we have no debt except for our real estate. So I don't have to worry about debt or anything like that. The only debt we have is our real estate. And heck, we only have like 50% of our real estate in debt. So what I'm trying to say is, when you're when you're feeling yourself getting anxious, look at history about times when this exact same thing happened. And then look at 10, 20 years later and how it worked out. You want to be the person that's different. You want to be the person who is not on the ledge looking down going, oh my God, I can't see the abyss. I can't see what's going on below. Just know that if stocks go to zero, the last thing you're worried about is how your net worth is zero. It's Armageddon, it's fiat, like stocks aren't going to zero. We could only be so lucky. No, I'm just kidding around.
What about people in the latter half of their lives, or at least more toward
retirement? If you're
retirement?
Close to retirement, you should just be in general careful how much money you have in stocks.
Yep.
I have good friends of mine who are close to retirement, and they were complaining recently because their returns weren't high. And I'm like, well, that's because you're not in a lot of stocks. Like, yeah, why is that? I'm like, because you're going to retire in 3 years.
Yeah.
And if there's any sort of, if there's a 40%, I said to them, if stocks fell 40% and stayed there, would you be able to retire? Well, no. That's why you're not in stocks.
I see.
Because you shouldn't be willing to lose what you can't afford to lose. If they lost 40%, they wouldn't be able to retire. If their goal is to retire, that's their number one focus. Is their retirement going to be better because they have 20% more money? No, it's going to be the same. So why risk the chance of not being able to retire? Doesn't make any sense.
Very bad risk to take.
Pardon me?
Very bad risk to take.
Correct.
I was talking to a couple the other day. They're really close to retirement, and they're like, well, I want to generate more income and this and that. I'm like, I do not think you should be putting a lot of money into the stock market, because I said, what happened during COVID? Is, well, I lost 40% like everybody else did. I'm like, could you retire at that point? No.
No different. So with stock market crashes, I can guarantee we'll have plenty in our lifetime. I can guarantee there'll be plenty of bad news in this country. I can guarantee that all the major companies will have plenty of bad news. But what I will say is the S&P will be higher 30 or 40 years from now than it is today in all likelihood. And even if it's not, if you bought all along the way, let's say the stock market did this. This is the stock market. It went up like this, and let's say 40 years from now it's this, the same level. The same level. Let's say hypothetically it's 40, same level. Guess what? You bought all the way along down here. And your average is here. You still made money. You still made good money. And you still collected dividends. That's the reason you dollar cost average. That's the reason you don't worry about crashes. That's exactly it. And anybody talking about crashes and how you should be fearful and pull money, whenever I have people say, Paul, you think there's a crash coming, should I pull my money out? No. If I have 8 or 9 businesses upstairs, I have tons of real estate, I have cash flow coming from so many directions. I can afford to time the market in a sense.
Yeah.
All I'm doing is saying, I don't see value here, so I'm not going to buy. The second I see value, I buy. I bought Alibaba, I bought Intel, I bought Walgreens, I bought Smith & Wesson, I bought Herman Miller. I buy these companies that I see the value in. So I own them. But I literally asked me the stock price of any of them today. The only one I know is Intel and Baba, because we talked about it, because people were texting me about it. That's the only reason I know them. Other than that, I have no idea what they're at. No clue. Nor do I care. All I care about is 10 years from now, do I think they're going to be higher? Yes. Do I think they're going to be higher, better than the stock market? Yes. Why? Because I'm paying a lower multiple of earnings and profit than other people are going to pay.
That's really the nuts and bolts of the whole show.
Listen, you drive the less money you pay for revenue, profit, and cash flow, the better you will do. That's it. If you just stick to those parameters and buy 30 or 40 companies a year that are selling for the lowest multiples of those, you'll probably do pretty well. I imagine I know for a fact, based on back testing 25 years, you'd beat the market. But it's hard to do that when Square is up 600, 500% in 1 year, and Tesla is up 700% in 1 year, and Netflix is up, because then you see everybody else doing that, and you don't have the balls like me to go, don't care, I have no FOMO. Zero fear of missing out. Zero. Tesla could go up another 1,000% tomorrow, and guess what I would do?
Yeah, Paul, this takes a long time, you know.
It does take a long time.
I had...
But we have YouTube now, and we have people getting this pounded into them by us every single day. Keep listening to it. It'll eventually seep in.
I owned that Bitcoin 3 years ago, and literally, Mo, I would check it 3-4 times a day.
Come on.
I know people that do. I mean,
you checked it that much?
I have a friend.
When it went up, I was, oh my God, Beth, you're not going to believe this. And when it went down, I was like, oh my God, what am I doing?
Seth, I literally have a friend now. He probably checks his stocks and net worth probably 5 times a day throughout the workday.
And then, of course,
It's
Paul,
like almost hourly.
You see the same thing now because, I signed up for Coinbase. Did I? Why did I do that? Oh, my son was gifted.
That's right.
My son was gifted.
Yeah.
Oh, that's right.
That's right, for his birthday.
For his birthday.
He was like, what is this all about, pal?
But Coinbase will text me. It's like, hey, Bitcoin's up 8% today, and it's amazing. I'm thinking back to those days where I used to monitor this and be happy when it went up, and then like wondering if my wife's going to stay with me once I lose $10,000 in a day.
Your wife should leave you, but for totally different reasons.
We know that, Paul. Just don't tell her. Hopefully she's not watching the show.
Don't give her ideas.
Yeah. All right, guys. Well, that's sort of the gist of what we've been doing for a long time. I have grown into the idea of not worrying, hopefully embracing those red days. Our popularity soars during red days. So I guess when it does all come crashing down,
they want the calm.
We'll see you on the live stream. That's a take. Final thumbs up. Watch more videos. Thanks for watching.
Created the software because our users kept requesting, how do we do our own research without waiting for you to make your own videos? So we spent lots of money, created the software. You get everything you already saw in the video. You get all of this content right here, which includes 30 years of financial data, access to Seth, Mo, and I. You get it all on your mobile phone. This entire website, everything you've seen on your mobile phone. You get the stock analyzer tool. You get real estate calculator, retirement calculator, all the extra additions. You get our 8-pillar portfolio, exclusive daily content, 2 or 3 videos a day from Seth, Mo, and I on separate topics. But most importantly, guys, you get access to over 6,000 people are current active users of our software. They're in a chat that's very organized with multiple rooms about different topics. You can talk to them about all your investment ideas, tell them your ideas. They give you feedback. You have actual discussions because most of the people are like you out there who didn't have others to talk to about investing. Now you do. This is wonderful. It's only 90 cents per day. Less than a cup of coffee, guys. 90 cents a day. If you can increase your returns by 1 or 2% a year or decrease your losses by 1 or 2% a year, this will lead to hundreds of thousands, if not millions of dollars in extra wealth when you retire. 90 cents a day, guys. 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of everythingmoney.com is you get no sales tax charged to you yet because we're not big enough. So sign up, you get access to the minutes, 90 cents per day.